Hello guys, today I'm going to talk about liquidity using smart money concept and how different types of liquidity affect price on the chart. Okay, so first of all, we have dynamic liquidity, static liquidity, and liquidity sweep. Okay, so under dynamic liquidity, we have we have external and internal liquidity. So under external liquidity, we have highs and lows. Okay, highs and lows. That if the market is in an uptrend, when the market is in an uptrend, let me say, I had here break of structure. That the market was making higher highs and higher lows. Okay, in an uptrend, the market comes from external to internal. Okay, and under internal liquidity, we have fair value gaps and the order blocks. Okay, so the market, it will come from external liquidity to come and take internal liquidity, which we are saying that we have fair value gaps and order blocks. The market will come and take some liquidity from in internal structure, fair value gap or loop, and other block for it to continue in upside direction. Okay, so in another scenario of downtrend, the market will come from external, go to internal to take some liquidity. In this case, we have fair value gap and the other blocks as our internal structure, our internal liquidity. Okay, but if the market was making higher, lower lows, higher lows, lower lows, lower lows, higher lows, making break of structure, it means in the future the market will come also and take some internal liquidity for it to continue downside. Okay, so another one, we have static liquidity, where we have equal lows, equal highs, and trend line liquidity. So in this case, under static liquidity, we have equal lows. If the market was making higher highs and higher lows, and here instead of making another higher high, just made an equal. Let me first make this. Make equal lows. Now, in the first case, when approaching the chart, you have to first see where what was the origin that caused my break of structure. So the origin that caused the break of structure is this one, to become my point of interest. This one will become my point of interest. But I have marked my point of interest, but I don't have liquidity. Remember, liquidity acts as the oil or the fuel that boosts the movement. Now here I don't have liquidity. And remember, liquidity in uptrend movement has to be above your point of interest. So here I may be having a fair value gap. It might be a fair value gap. So it means if I have this fair value gap, it might become a trap, and the market just give me a simple movement like this, and it comes takes me out and continues in this direction. Okay, so you have to first mark your liquidity very well. Now here, if you have equal lows, it means they will act as my liquidity. This it will come and take this liquidity for it to go up, take the external liquidity also, like that. Okay, same as the in a downtrend movement that the market has been making break of structures, making break of structures, breaking lower lows to make a break of structure confirm as a downtrend movement or a downtrend. Okay, so the market was making higher lower lows, higher lows, lower lows, and here it made equal lows. It means in the future this one will become our liquidity for it to continue downside. Okay, and another one we have trend line liquidity. Trend line liquidity, let me say that the market was making lower lows, higher highs like this. Okay, like this. Now we have break of structure here. Boss. Okay. Now when they come on this equal lows, these ones, you see, might look like this. It means, in all means, the market has come and take that trend line liquidity for it to continue in its upward trendy movement. Okay, like that, guys. Now the remaining one we are having the liquidity sweep. So this liquidity sweep for me I use it during when the market takes daily high or daily low. I will show that in the next video. Let's say that the market was making lower lows, higher lows, lower lows, higher low, lower lows. So now instead of making instead of making another lower low, it caused the break of structure. Okay, so it has swept this recent lower low and caused the break of structure. And caused the break of structure. So in this case, the market has changed the sentiment from bearish to bullish. So we shall mark our origin that caused the break of structure or our strong low. This one will become our strong low because it has broken the recent lower highs. Okay. So we shall wait for this market to come and trap in our point of interest continue in upside direction. Okay, causing break of structure. In another scenario, it can be looking like this that it has been making higher highs, higher lows, higher highs, higher lows. So here it swept this recent higher low, lower low. I mean higher low. Okay, so and it went to make a break of structure. You see, so it means this one acted as a liquidity sweep, not change of character. If it was a change of character, it could have just reacted from here and continued down. Okay, I just made a break of structure. Just made break of break of structure. So this one becomes our strong low. In any case, the market will come and take this and continue in this movement. That is it, guys. See you in the next video. Please subscribe for the next to see the next video which I'll be posting. Love you.